Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream will be running today in YouTube until 12:30 Eastern Standard Time. And then the following half hour will be exclusively in the Bookmap Discord Trader Lab community, where I'll continue a live narration. We've been having a very busy day today. And those of you who follow the stream, you know that yesterday our target on the short that we had was down at the low of the day, which is a rather outsized opportunity. And that stream is posted for everybody on YouTube, and it is also available in the Bookmap Discord Trader Lab community. Let me try to get things going here. Have a few changes going on, so hopefully everything is good. You can hear me okay. Thanks, Lucky. Let me just get some adjustments here. Thank you. Okay, let's see if we can do this. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room. It is based on structured trades, and these are available to everyone at no cost in the Bookmap Discord Trader Lab community, as well as a library of webinars on this process. The Trader Lab is really about the business of trading, understanding how the market works, why it does what it does, and how at times you might get in alignment with it. In addition, it is a compilation of auction market theory using a volume profile, which is based on participant behavior and volume, and a high-tier order flow tool. I got a lot of noise, so I got to turn this down. A lot of alarms and crazy things are going off, right? And integrating it with order flow using Bookmap. When you put those pieces together, and assuming you have a vetted trade plan, it may actually give you an edge over other retail traders and the other traders or participants that we compete with. And like everything, the outcome is random. It is based on you developing a vetted, structured trade plan. And a business of trading is very much like operating a casino. They only play games that are structured and have anchored inputs. In other words, not variable inputs, multiple time frames, multiple indicators, et cetera, and so forth. Throw a lot against the wall. What they do is they only play singular games that are fixed as far as their inputs go. So in trading, if you take a similar approach to a business that's already successful, we might want to model a trading business after a gaming business. And that means only playing games that have an edge, not making it up, not impulsing, not be emotionally triggered. Just have a business plan. That's what the Trader Lab is about. So if that's something you're interested in, I invite you all to come to Trader Lab, check it out. There is no cost. And I think you'll find being in a community of like-minded traders who are looking to build the business might separate you, at least your outcome, from maybe what other traders experience. And of course, you have to do the work. And in spite of it all, it still might not be appropriate for you based on your individual skills and the time you put in. This is not easy in the sense of the time that you must invest and to become proficient. Now, this stream is going to be continuing after the first hour in YouTube in the Bookmap Discord Trader Lab community. If you're in YouTube, there's a link in the bottom of YouTube. You can access the Trader Lab. You do need to confirm if you have a Discord account or you don't have one, you're going to set one up. You can join Discord and then just verify your information. It protects the community, and we're interested in protecting our community from phishing, spamming, and other nefarious activities. In addition, there is a free version of Bookmap that if you're interested in, it's a digital version. You can get your hands on it. So this way, if you have that, you can access all the specific education and special streams that are for Bookmap subscribers, and there's no cost for that either. So be prepared for the switch over today. Come to the Bookmap Discord Trader Lab community. Use the link in Discord. And thanks for visiting Trader Lab. Let's get into it here. Whoa. Okay. Higher time frame, guys. Now, let's talk about yesterday very briefly. Yesterday, we were looking for the market to go up, to go down. And that's kind of what happened. Now, the fact that happens is, I would say, coincidental. However, market mechanics is what this is based on. The market goes up to go down. So what happened day before yesterday? The market had a big sell-off. The market is short. What happens? The market opens. There's shorts in the market. They can get squeezed, and those who think the market's a bargain and on sale, new buyers come into the market. Well, if you're in Trader Lab, you would know not what will happen, because none of us know that. You would know what might happen, and you would understand market mechanics and behavior. Yesterday set up longs based on the previous day's behavior, and then shorts to take out yesterday's low, and that's what played out. Now let's think about today. What did we have yesterday? Sellers. What is the market condition yesterday? Short. What do we anticipate? Buying. You're going, really? Yeah. Now, anticipate doesn't mean predict. Let's really be specific about this. Nobody can predict anything. We can, quote, speculate, maybe, or anticipate. So then it's about trade plans. So we can anticipate the possibility of the same behavior today as yesterday, because the condition of the market today is the same as yesterday. However, if we get longs early, that sets up shorts. Now, so what do? Well, you can trade the longs and you can trade the shorts. So what do you do first? Well, maybe what you do is you pull out your trade plan, and once you can define the condition of the market, now you have structured trades that you've vetted that are now qualified, subject to their specific qualification. In other words, the trades might be qualified, but then they have to fit the parameters, range for scaling, things of this nature. So this is sort of a sequence of events. Now let's talk about statistics. Got to get my statistics out. Now, I always go over statistics, and this is available to all of you in the Bookmap Discord Trader Lab. I'm just going to, instead of spending time with those are available. Let's talk about, we have, let's just say about an 85% probability-ish of taking out yesterday's high or yesterday's low. By the way, what is the trend? I'm going to suggest it's down, maybe, okay? So if that's the case, we have a high probability of taking out either yesterday's high or low. We also have over a 90% probability of taking out either the ETH high or low. Okay. And we also have about a 70%. Let me just find it here. Where did it go? Hope I have it in here. I'm missing a level here, guys. Guys, do I not have naked volume point of control in here? Where's our naked volume point of control from yesterday? $55.35? Okay, thank you. This is a target also. This is the highest retail price from yesterday. It's called the naked volume point of control. What it is high volume. And if you're subscribed to the idea that trading is really a shopping experience, and that's kind of how I relate to it. Think of this like where the fairest or highest volume was. No, there it is there, 30. What am I? Yeah, okay. Losing it here. Hold on, guys. I got to just change something here so this makes sense to me. Having a hard time here. You'll forgive me, please. So this is the highest retail price from yesterday, 35-ish, whatever it was. Yeah, 35. So it's roughly here. So there's about a 70-ish% probability we'll check here. The overnight volume point of control is in the 80 percentile. Overnight mid, 72-ish percentile. You can't quote me on these because I'm just doing them out of memory at the moment because of time constraints. And then, so we have yesterday's low, we have yesterday's high, we have the highest retail price, and we got some of that going on. So now let's look at now. So when we come in, we know not what will happen, what might happen. This is what trade plan is about. And the key to this is what happened yesterday and what's happened in the ETH. So yesterday we got shorts in the market. Now, if you look at today's ETH, it was two-sided trade or balance. Let me show you what that looks like here. Getting a little hard to do this. But this here is the ETH. So I want you to see what we're looking at. This is the volume profile. Now, what it is saying to us, and it's a language, is this is too high, and this is what a consolidation looks like. This is too high. This is a consolidation. This is all ETH. This is too high, and these are consolidations. And as we rotate around, it's saying is this is now balance. Balance is two-sided trade. So when we know the market is short from yesterday and we have two-sided trade in the ETH, then coming in today, we can anticipate two-sided trade to start. So then it's, there's longs and shorts on these edges. So then that's why it sets up either the ETH high or low. We have yesterday's low here. So logic would suggest if we had selling yesterday, that then we would go down first, take out yesterday's low and keep going. But the two-sided trade in here suggests, just like yesterday, maybe the shorts will get squeezed first and then we want to get short. So longs, maybe, and nobody knows. So let's look at the open and let's go into the RTH. Now, I'm going to tell you, and I always say this, and I just have to tell you, this is my least favorite condition because when you get into this kind of stuff, I find it very hard to trade because I don't recognize initially what might be going on. So I'm going to start with structured trades, and if they fail, then I might mean I'm out of alignment. So I cannot tell it's going to fail until hindsight, right? Just like you. So who knows? I don't know. So this is the RTH open. This is the retail price from the ETH. Now, this is important. Remember, this is the retail price from yesterday. So it's a target. And this is the retail price from the ETH. What it is saying is, after all of this bouncing around, this was the price where most of the volume took place. Think shopping. This is now the fair price. Now, it doesn't mean anything other than that's where the high volume is. So what do? I open, I cross it. Now, I'm going to take you into fractals and I'm going to drop down in time frames. So what this is this is showing me I got buyers. I am now above here. Is this too low? Is the question. Is this too high? Is the question. Or are we just going to, whatever. And this is part of the joy of trading, being in an uncertain environment. Who knows? So this is called VPOC migration. What this is, and this is something, these are just things I've developed over many years of doing this, is that this represents the current retail price. High volume is where the buyers and sellers are transacting. That's logical. You go to store, retail is where buyers and sellers meet and they agree to do business. Well, the thing in our market is that it's the same process as when you shop, except it's happening in real time here. They don't change the price in the store too often. They put it on sale, they raise it up, they do whatever. But in our market, it is dynamic, so it's changing in real time. So this is a way to keep track of what the participants value the product at, whatever it is. So let's look. This is VPOC migration. I'm going to label it. And this is, again, and I call this a variable high volume node. I made all these things up. They didn't exist when I started doing this, or if they did, I'd never heard of them. And I started doing this in market profile back in the mid-1980s. So might be before a few of you were born. This is a variable high volume node here. I'm just going to throw this on top of settlement. And I go slow in the beginning, but I'm going to go faster. Too low, break high. This sets up a long here against here and here. So I know if I come out below my opening swing low, which is basically here, there's stops under here. We got to, by the way, we got to label that. Let me make sure I got the right. I think it's about here. So what I know is if I come back here, then the possibility exists right here that there's going to be sell stops from these buyers. So that's the first, not the first thing, but this is telling me north. This is telling me if we rotate down, then this can get taken out. So I take a long. This is my support right here. Notice variable high volume node. This is a trade. You guys see me do this all the time. And it's a structured trade. The target is here initially. So if you got long in here, your stop's got to be under here. If you got long here, which is the better location, of course, you're going for this for scaling. Then continuation. Now we have more targets. We have this. We have this. Okay, statistically. So that's where we're trying to go. And again, nobody knows. So long scale. So if you got long in here, you're scaling here. If you got long down here, you're scaling there. Because this might be too high. Remember how the market works. In the fractal, if this is too low and we leave it, the shopping, well, and we're opening under yesterday's retail price, is this too high? Very logical, isn't it? In the ETH, is this too low? Oh, it's too low. In the developing time frame, too low because this moved up. Test here, still too low. Over here, too low. Back and test, too low. Back to what was maybe too high. That's why it's a target. Does that make sense? Is that a yes? Is that a no? We're not sure. Thanks. Okay, so this is the target. This is your scale, and then you're going for higher targets. Now let's watch and see what happens here. Where do we come? Let's go take a look again. Variable high volume node. Now, for me, I get taken out of these. I manage my trade, I get taken out. And then I'm looking at, well, I got my stops under here, but right here, I come right back to my level. Let me see if I get this right. Yeah, right here. So this is chop, chop, chop. Now this right here is micro. You see the variable high volume node? This is the location. Same as this. Location, location. This is like real estate. You ever heard the term location, location, location? This is what structured trading is about. It's having the discipline, which is not easy for us, being mere mortals and emotional beings, to just wait and be willing to pay to find out if you're wrong. We are above the overnight volume point of control. We have our buyers. The issue becomes, is this too high? So right now, if this is too high, where's too low? Well, it's not there. It's not there. Now we can fall out the bottom and keep going. Or if we hold this, and here's our micro structure right in here, we break high, it sets up a potential long. And where's the test? Micro volume right in here. This is a fractal. Again, I'm not going to do a lot of detail. I will do that in the Trader Lab. Now, where's our resistance? Isn't it here? Let's look. We have this, and where's the volume in this structure? It's there, because that's where we broke from. And you can see the volume here. So I'm going to take you into the story. Now, let me just draw a little box here for you. This is a consolidation. It's not complicated. You guys know what these things are. So right here, you have your chop too low, too high, and we break away. We come back to this one down here. That sets up a long, and where are we trying to go with it? Back here. This is the outside edge of the consolidation. If you get long here, it's got to hold this volume there. Same thing as what you're seeing up here. You see the volume? You got that volume in here too. And here's the other thing about order flow. You see these sellers here? They were absorbed. Buyers were aggressive here, right on the RTH open. We had absorption here by selling icebergs. They got run over. Sorry, Charlie. Now we come back and test these buyers and the variable high volume node. Too low. That's why we go too high. Then we come back and check it again. Too low. Then you're going here and you're looking to come back here. Or, let me give you the or. Or, this, if you perceive this as too high, this is also a short. So you have choices here. You can be long to squeeze, short to take out the opening swing low, or you could be long here to here and then out the top. Either one would not be incorrect subject to your plan, because the opening swing low, remember, I pointed that out. We take out the stops. Now what? Too high, stops out. Now the possibility is to keep going or come back. Let's see what it does. This here got me twisted, as they say, in the wind. Because once I had this, and this failed, then it was shorts. Okay? I came back. Once I came back in here, then I'm looking at this and I'm going, right here is too high and this is too high. So I came back inside and right here, things got a little nasty. I got stopped. And now I'm going, okay, now what? I'm above this price. If I come back inside, possibly I'm now going to go back, get the ETH high, which has a statistical probability, and yesterday's high, which also has a statistical this. So these are now my targets. Now I turn the barge around. So this is my area right here to be looking for a long against this, because this is resistance. You know, resistance becomes support. So once I get abused, I break up, I pull back, it's a long for me. And I'm looking for, yes, back to here and then out the top. Out yesterday's high. Okay. So that's the trade. So I get my scale. I'm thinking I'm good now. And I break under here. So this now is rotational trading. It's my least favorite condition. I take a lot of stops. I get abused because what I'm trying to do is stay in alignment with it. But it's very hard because once it's doing this, I know now that all bets are off, if the term I think is correct, because now we're doing this, and this is not good for me. It's just not one of my. This condition is hard to get a grip on for me. So we come out under here, come back to the open, overnight volume point of control, and it's either now I'm debating with myself. Is this a long or a short? Because my plan was longs and then shorts. When I came above this, then my plan becomes longs from here. When I break below here, I'm now confused right here. So right in here, I'm thrashing mentally. I'm saying I'm going long, short, long, short. And when that happens to me, I have it in my plan to go slow down, you know, what's going on. Because, and it's not, the market does what it does. For me, what it was is it's not in alignment. My plan and the condition right now are not aligned. When I'm going, what's going on, which is a lot of the time, I just wait until it fits in my plan and the market. So the market could be doing its thing and I have my thing to do, my plan. And if they're not in alignment, then I don't have trades. I have confusion and conflict. And in my plan, I have it in my trade plan. When this happens, in other words, I use a narrative for conditional statements. If this, then that. If not, then what? If this is too high, so if this, I come to, then that. If that's too high, then short. You know, that's conditional because I'm using the auction. When things get out of whack and I can't read it, then that's in my plan too to go stop. Because, and that comes because when I find myself going, it's a long, no, it's a short here. No, as soon as that's happening to me, then my plan is not in alignment. I'm sure, you know, I'd love to have a better plan that's alignment with everything. It's not. So I don't have anything here. So what I'm trying to do now, right in here, I didn't have anything. Because we came back under here, under this naked volume point of control. And when we came back underneath, I was thinking right here, I'm looking for a short. So I have a VHVN here. I'm at this level and I'm thinking, okay, I'm outside and now we're going to come back in. Mean reversion. So this is mean reversion. This is outside back. Now I'm looking, since I'm below here, I'm just telling you what I did. I'm looking for a short here. In here, this structure. So I'm looking for a short and I have volume here. So I took a short here, I took a stop. Just telling you, it's what I did. I went, oh boy, you know. Then I'm thinking, well, I've missed this whole thing. Because now my target is up here. So I'm just kind of disgusted with the whole thing at the moment. And that's just kind of what it is. Also at 9 a.m., now we had the report, you know, a big report, 9 a.m. Now, this becomes the IB high. Initial balance high is the first hour's high. And statistically, if I take out the first hour's high, I have a high probability, the first half hour's high, I have a high probability of extending this. So I'm thinking, well, I should be thinking longs. I'm above that. I've got the stat. Looks like we're going higher. So that's what I'm thinking. But let me give you the other side of this. I'm thinking that, but my plan said buying early, selling, taking out yesterday's low, and I have a target below at the moment, or was at the time, which I posted in Trader Lab around 5,500. So that's my main trade, but this is all messed up for me because I'm thinking, well, I'm wrong. My plan, you know, the market has different plans, you know what I mean? So we come up, we take this out, and I'm just perplexed. So I don't do anything with this. I'm just perplexed. I'm saying it can go without me. It doesn't matter. And sometimes you just got to do that. Now, other traders trade this. I'm sure they do great. Me, now this could be a short right here. This is a trigger. And if you took it, now I didn't, I'm just showing you though, you'd be coming here and there because this is our support. Remember, naked volume point of controls right there. So we can come back and check it. If it's too low, we can come back up here and check this. So what we did is we exceeded it and we have another trigger here, sellers. Test of the volume. You could see it. Here, let me show you what it looks like. So what I do, and I will tell you, today was confusing for me. So, you know, I just take my stops because I'm out of alignment. And all I do is I try to stay in alignment, but I don't forget the context, which is bearish, down. So let's look here. This is microstructure. Now, I don't know. It's going up. It's going up. It's going to the moon. Right here, there's a change in behavior. You see the break. So the volume is right there. That puts me on alert. Now, I'm also thinking we're going to keep going higher. But I see this. This is the same thing as what happened here. Rotation. So I'm looking for rotations. Let's look at another fractal here. So what this sets up here, this is a consolidation. And it's based on this structure here. Now, I don't know anything about this until after the fact. And let me show you where the after the fact is. So this is the chop. This is the consolidation. This is the trigger. You'll notice up, 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 up. Where's the counter rotations? I don't really see them, do you? Up, going to the moon. Change. That's a trigger. Now I got to look in the structure. What did we have here? A consolidation. What happened here? The buyers are up here, and at the time, you don't know, and we got selling icebergs. Now, they're selling icebergs coming all the way up here. So why would this be any different? It's really not. What's different is what happens. There's buyers here, and as far as we know, off we go, going to the target if that was your thing. Sellers come in here, and we break aggressive selling. Now, these guys were absorbed because we have aggressors, and the passive side was absorbing the buyers. You don't know until you see this. Now, what do I know? This is too high, and that here is too high. See the volume? So I have microstructure in here, which I can't do anything with. It breaks away. Now I know. Now I have this outside edge, which is aligned with that volume. So I'm using that volume, that volume. This is a short. That would be a short. Your stop's got to be out here. And then you're going for mean reversion. It's the same thing as what this would have been. This. Now there's more. You do remember this. What was this? This was support, wasn't it? We got all of this stuff. When you break below this one, that suggests a problem. And there's stops under here. When you break under this and you test this and you test this, the overnight volume point of control and the variable high volume node, if they're now too high, it suggests south of the border. So subject to your trade plan, you could be short off of any of these, or we have a structured trade. Now, this is a little bit more advanced, but we have a structured trade in TraderLab. It's called the IB continuation trade. I'm going to show it to you. And we talked about this in TraderLab. We talk about this all the time in TraderLab. This is too high. We are below the ETH retail price. We come under the open. This was the low when we picked those stops off on that rotation down. You remember early on. So this now is the current low of the day, and it was set at 930. Remember, we have an IB high and an IB low. So over here, wherever it is. Losing my mind here. Where am I? Here it is. Sorry, guys. So this is the first hour's low. And the reason it's important is there's over a 90% probability we'll take out either the first hour's high or low. Now, remember, trend is down. And of course, based on what was going on when we were up on top, looked like we're going to take out the first hour's high. This is part of the joy of trading. It's all random. It's all uncertain, and who knows? So you just try to stay in alignment. At least I do, because I can't predict anything. But once I recognize behavior, then I have a plan that puts me into play. So this, once I take this out, the structured trade, And you'll see how the support was here and here, so support resistance, support resistance, support becomes resistance. Support becomes resistance, support becomes resistance. IB, support becomes resistance. So what is this? This is that low, and now we're taking out the first hour's low. This sets up everything for what's below us. So this is a potential short because we took it out. This sets up something called the IB continuation trade. There's two ways to do this. Here, after this, we come back here. This is a short. We're at an outside edge of a distribution, a little more advanced. Here's the high volume node. Remember, what is this? Shopping. Now I break down. Watch. The IB is here. So we have this for shorts, and we have this. We have this, and all these are potential shorts. And your stop needs to be above here, this volume. Let me just mark this, because what I'm doing, guys, it's very simple. I'm looking at the auction. Auctions are like, they're fractals. They take place at all time frames. So as you think of them, I don't use the clock, so there's no time. It's behavior. So when you get a chop, 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 what you have here is absorption here. You see 1,000 icebergs. Hello. That's what creates this. Then I have my sellers up here. So I have buyers absorbing here. You see the sellers? 623 sell stops. Thanks for playing. This is when your broker sends you a gift basket. Then up here, I get the sellers. So passive buyers absorb that, and then here. So I'm going chop, chop. In here is volume. I break low, I test it. This is a possible short. I come over here. This is too high. I test it. It's a possible short. I break here. This is a possible short. I break here. This is a possible short. I have volume here. And down we go. Now, there's more. So all these are shorts. Next target is yesterday's low. Remember, about an 80, whatever it was, 40, I think it's an 85% probability. I can't remember. Past performance, not indicative of future results. You got to vet these. So the short in the Trader Lab is from this area to here. Then hold. Now watch. Where's the volume in this structure? It is here. You can see the little node right there. Now I'm taking you into more advanced processes. This is too high. This was too high. Sellers. If I come back to it and it's still too high, I get micro volume there. Seller. I come back and test it again. Seller. This is kind of suggesting to me, sellers. What do you think? And our target, and all this is posted in Trader Lab, is this for me. This is where I find, this is where I got out. So, because I have to stream. So that's the end of my trade. And these are all posted in Trader Lab. And if you were in Trader Lab, you would be shooting for targets. Now, why, by the way, why is this a target? Here's why. This is an intermediate time frame, high volume area or node called the microcomposite volume point of control. Microcomposite is just a term for intermediate time frame. So when you put a bunch of RTH days together, you'll get high volume there, just like we do in the little fractals or anything else. So that's why returning here is the same as testing this from the ETH high volume. Or if we go down to the subatomic level with the electron microscope, it's the same as this. They're all the same, but the difference is fractal or time frame. So this is an intermediate time frame. This is micro time frame. This is developing time frame. So it's all the same. Once you understand the language of the market, and I don't use any indicators, I use order flow, I use the volume profile, because it basically tells me what the shoppers or participants think of an auction. In other words, what's this thing worth? I'm not paying that. Okay. Well, what do you think about this? Nah, too much. What about it there? No. See how it stair steps? And this was left over from the last time we were down here. There's also another target down below someplace, which is there, I think. 54.68. In fact, yesterday in the stream, and maybe even the day before, I gave you guys this target. See, the thing about it is we can't predict anything. In other words, does the market do something? Will it do it? How does it do it? All random. Will it ever do it? Don't know. So it's not about predicting. It's about understanding what creates behavior. I can't predict anything. What I can do is understand why. If I understand why, then it's a matter of alignment. And the other part of this is I take stops, I have losing days, and if anybody thinks that there's any way around that, then you don't understand the business. Casinos pay the gamblers, but they have an edge. They don't rely on one hand to define whether or not they have a viable business plan. They rely on playing games, or for us, structured trades that have a statistical edge over a large sample size in a random environment with a random distribution of outcomes. That's really the business of trading. In between, we take stops, we have overhead, we have cost of production, we make errors because we're human. We will hit loss limits if we're managing our account because it's more important to be here for tomorrow than it is to revenge trade. All of these are just part of trading. And once you've been in the business for a while, you'll need to learn about yourself, your emotional responses. That's why journaling is so important. And you'll also find that you make repetitive errors. And you'll start to recognize what were the conditions that preceded the error. Did you just take 2 stops in a row and now you're actually trying to make it back? And you're not conscious of the stimulus. It's all emotional wiring and triggering. So, I know early on, I would, put up big posters like on my monitor, follow your plan. But what happens in the moment when you get myopic and you don't have a plan? Or maybe you don't have a plan anyway and you're just playing a video game. That's probably, I'm going to say probably, not a recipe for longevity, because that's what most retail traders do. Or your curve fitting indicators so you can catch the big move. Meanwhile, all the ripples and all of this stuff in between is going to potentially cause you a lot of pain and maybe unnecessary losses. If you knew where your trades showed up and they had an edge, would that give you a better way to control your emotional impulses? Now, remember, the emotions are, we don't control the impulse. We can learn to control the consequences of responding to the impulses. They are hardwired in. So it's not about willpower. It's about statistics. If you have nothing but your emotions guiding you, or they are let's just say, the top tier input for you, how you feel, what you see in the micro, in the little ripple, if that's how you trade, that's probably not going to be sustainable. If you're bailing out of a trade because of your fear, that is not sustainable. If you're moving your stop where other retail traders do, there's a reasonable chance that it's not sustainable. So how do you make something potentially sustainable? You have to measure it. You have to know where your edge shows up, and that makes it tangible. If you can open your trade plan and you see a trade that you've defined and vetted, and we do that in Trader Lab, there's 60 PDFs of these structured trades that you can reverse engineer, and you just need one to know that it has a statistical edge. You open to the trade, you know the conditions where it's qualified, it shows up, and you know you have X% probability, a positive expectancy to get risk neutral before taking a full stop. Now you've taken something and made it tangible versus relying exclusively on how you feel. Do you think that differentiates you from most other retail traders? What do you think? Does that make sense? By the way, if you have questions in YouTube, please post them. Remember, this stream is going to continue At 11:30 Central Time. I have to get used to this. I'm going to be switching over to the Bookmap Discord Trader Lab and streaming exclusively in there. You're all welcome to join. There's information there in YouTube on how to do that. It's simple. There's no cost, but you do need to confirm your Discord email. It provides security to the community from the phishing and all the nonsense, as you guys know what that's all about. So that's the objective there. Also, this stream will be available to review, probably not immediately, but it will be available and you guys might be able to find it. Also, we are going to have support in the Bookmap Discord Trader Lab for streaming. There's going to be a large number coming in there, so we are prepared for you. So you will see, you can just go over, and it's not the text channel, it is actually the voice channel. You'll see it says Trader Lab, and you'll see a little speaker, I think next to it is what it looks like, and you should be able to access that. So I look forward to seeing you guys there, and we're going to be doing more exclusive content for Trader Lab participants and Bookmap subscribers. And I invite you guys, remember there is no cost for this, so we're trying to make the community better for our participants. So we'd like you to be a participant also and take advantage of all the education. And if you're a Bookmap subscriber, and there is a free digital version of Bookmap, you'll also be able to attend subscriber-only streams and education. By the way, this is what the 60 PDFs of structured trades look like. You can click, there's a link in the bottom of YouTube if you're interested in seeing what I'm doing here and why. You'll notice the VPOC migration. These are live trades and other things, and some of these are, these are live trades I took. And, these are, I'm not a vendor. I'm just like you. I've just been doing it longer, that's all. So I've gone through the same thing you've gone through or are going through. We're all the same, guys. No, but there's no secret sauce. There's no holy grail. There's nothing like that. There's not, I go on the internet and I see all kinds of nonsense. And unfortunately, it probably causes a lot of you to waste your time, resources, and possibly your equity. All we have in this business is a limited amount of time and a limited amount of resources. And that includes time and dollars. So I suggest if you've not been making the progress you're looking for, do not keep doing the same thing if it doesn't work. This is an outside edge. It's called the low volume node. What can happen here is if we come across here, then we're going to squeeze out the stops that are sitting here. And this sets up a process or a context potentially, and I don't know if it'll do it. It's not my job to predict, right? But I know the condition of the market. What's the condition of the market? Short. We have hit our primary target. Here, there's no precision, and there's more targets below. The market goes up to go down, and the market goes down to go up. If I can come across here, now I have buy stops here and here. If I come across here, I have what's called a low volume node out here. This is an outside edge of a consolidation. This is what it looks like in the profile. I'm going to label it. And what might that mean? And this is not a trade recommendation. Here's what it means. If I come out here somewhere and I get to squeeze these guys out, it's a short back to here and maybe out the bottom. Not a recommendation. If you come to Trader Lab in about 10 minutes, I'll be switching over exclusively to stream in the Bookmap Discord Trader Lab. This is what we're going to be looking for. And this is what we're going to be talking about. And also what I'm going to be doing is I'm going to be getting a little bit more into microstructure and order flow in the next part of this stream. Speaking of, let's get down to micro momentarily. What do you see over there? That's micro high volume. It's right there. Break high, test. This is a trigger. What does it suggest? If I'm managing a trade, I'm out of my short. If I'm playing mean reversion, which I would not personally, just me, not saying anybody else can't, it's not my job. What do I know? This is the mean. So if this is too low in a fractal, This is where I might go. Might being the word. And what else is here? This. So I have high volume in the developing daily time frame, retail price, and this in the intermediate time frame. Market is often, I'm not going to say, I always have to say maybe, because that's all you got back here. Why? Retail. And why do we rotate, you're asking? And why is this a long? If you're a counter trend trader, trend is down. This is the target. Then what might happen? Out here to here. This is for a counter trend plan. And I don't call trades. But can you learn this? And here's what the thing is. It's not this. It's why. I don't use indicators. This is language. So when you're using an indicator, I understand. Been there, done that. You're letting an indicator translate. What does your indicator tell you right here and right there? Does it tell you to get long or to cover your trade? Do you know what I'm saying? Does it tell you that the market might come back here? Does it tell you if you're a counter trend trader and you have a plan, not saying you do or I do, you would go here? Is that something you might want to trade? I'm not saying you should, but, by the time you get in here, you wake up, 93 to 99 is, doable. Then if you're in Trader Lab, you would know where the stops are, which is over here. You would, if you're a counter trend trader, get long to there, and then you're holding to abuse the shorts and the retail traders who are like lemmings, no offense. We're all retail traders, and they all put their stops in the same place. If we know that, wouldn't we be looking for it? What do you think? And then where's the outside edge? It's out here somewhere. Now, the part of this is what's hard about this condition. It's called mean reversion. So we're coming outside. And the reason we went from here to here is the same reason if we come outside, we can go from there to there. It's rotational trading. It's a specific trade plan. It's Trader Lab. Are you guys getting some from this? Does it make sense? How you guys doing? Are you doing all right? How about you guys in YouTube? Please give a thumb up in YouTube. Hope you're getting something from this. Please visit the Bookmap Discord Trader Lab if you want to watch this continuing stream, which it will continue. And I'm going to be switching over in about 5 minutes. There's a link in the bottom of YouTube. You can use that to access the Bookmap Discord Trader Lab. You'll go through a brief verification process to make sure you're not a spammer or fisher, and it's to protect all of our participants, including you. So where are we going? Long, scale, outside, maybe, back here, and maybe not. This is called mean reversion. I hope you guys are getting something out of this. Please give a thumb up in YouTube. Hope you found this useful today. Remember, Trader Lab, there's no cost to join the Trader Lab. It's a community of like-minded traders. It is built on traders helping traders, leveraging our collective experience to build something better. And trading is a business, guys. If you're interested in the business of trading, it takes time, effort, and organization and commitment. Also, it takes a community. So here's sellers here. What do we have? The buyers were absorbed. Where did we go? Where's my stops? Out here. Where did we get? Out here. Now, this is not a recommendation. Now we're going to be looking for this outside edge, and there's no precision. So we're looking for a sell structure, and I don't call trades, to get here and maybe fall out the bottom or come back here. Not a trade recommendation. If you have any questions, please post them in the Bookmap Discord Trader Lab. If you're in YouTube, the stream's going to be continuing over there. Use the link in the bottom of YouTube if you're inclined. And you're all welcome. There's no cost. You just have to verify to make sure you're not a bot. Whatever a bot is. I know what a bot is. I'm just saying is think of these terms. They never existed before. When I started trading, we didn't have computers. We didn't have an internet. My first charts, I drew them by hand. I don't think that's a badge of honor. It's more of a badge of, oh my goodness. And my first computer was an Apple IIe. Notice the behavior. And guys, again, not trade recommendations, right? So the goal of this trade was along to here and then to squeeze the stops, which are right in here. There's the stops, and there's selling icebergs, and there's the absorption detector. So right now, this is microstructure in a possible short. And you have to be very nimble with this because picking the outside edge is the worst part of this because I don't know where it is. You know, this is where I take a lot of stops. But what I do is I run very tight on this stuff because everybody takes stops. This is the outside edge. The thing we don't know in mean reversion is where is the outside edge. So you can get fooled very easily in this. So they were absorbed. There's the absorption. These buyers are absorbed. If we come out above here, then we're going to squeeze further. I'm seeing my sellers here. So we just have to watch this behavior. It's very nuanced. And like I say, for me, it's my least, if there's such a thing as favorite, this is not it. Because what happens to me is I kind of probe the market. If it pushes through me, I'll get out. And then I'll be looking further outside to put the same trade on because I'm trying to probe for a location. This area here is a viable location for me. And all I'm trying to do now is see who wins this fight right here. You can see the sellers are here. The icebergs are operating here. There's the absorption. And I got my buyers. If my buyers can push through, then we come up higher. If my buyers cannot get above this selling, then maybe back here. That's what this is. And you see how nuanced this is, right? You see the seller, you see the seller. You see the buyer here. Right now, the buyers are here. They were absorbed. If the buyers are going to win this skirmish, we got to come above. And the sellers that are here, if we come above a little bit, they may still sell, and then we rotate. If we blast through here, then this location's no good. So we'll watch this. This is a fractal. It's a microstructure. And again, I have to stress, I can't tell you how often I want to throw something at my screen. Now, I'm going to be switching over, guys. Use the link in the bottom of YouTube. I am now going to be moving over exclusively to the Bookmap Discord Trader Lab community to continue this narration. And if you're in YouTube, I look forward to seeing you guys in the Trader Lab. And thanks so much for visiting. Please give a thumb up and come over to Trader Lab where the stream continues. And we're watching this for a potential short, and it is not a trade recommendation.